everybody. Welcome back to my channel, Double Jackpot. Please smash that subscribe button. Let's give this video a like, and we're going to get into a request by many viewers. It's strange that I got this request out of all the different stocks and everything that's going crazy in the market. Good old reliable AT&T, ticker symbol T. And I'm not sure if I've said this, but I have owned this stock for many years, never even looked at it. It's grown. I've always reinvested the dividends. I've never looked at it, and it's probably a bad thing that I did not look at it. The stock has done nothing in 5 years. Going to go over some numbers about AT&T. A lot of retirees, a lot of old money, a lot of older investors park a lot of money into AT&T strictly because of the dividend. The capital has been eroded for the last 5 years. It's down over $13 in 5 years. But it has a 7.4 dividend quarterly. And that dividend's always, when you have a company that has amassed this much debt, it's very possible that this dividend can be cut. Subject to like the Ford stock, how their dividend was cut years ago. But I'm going to talk about what I think about AT&T. I'm going to get some things off my mind real quick. I'm not a financial advisor, which is a good thing because I don't think very highly of financial advisors. We do everything in our own house ourselves. I'm not saying there's not some good advisors out there, but I'm going to give you the Reader's Digest version of this stock. I'm going to do the numbers as accurate as I can. If I'm off a few hairs, so be it. But I've owned this stock a long time. When I say a long time, over 30 years. I think the IPO came out in the early 80s, I believe, around $5 or $6. That's irrelevant. We're here to talk about the last 5 to 10 years. At least the last 5 years I'm going to talk about. Do I wish I would have looked at this? For the last 5 years, I haven't even opened a broker statement in my house. I've been doing real estate, and I haven't even looked at it for the last 5 years since 2014, 15, probably 2014. So it's really, I started looking at my stuff after the pandemic. Miss Jackpot mentioned stocks at the pandemic of 2020. March of 2020, I had no interest in even looking at stock. I said stocks are for suckers. I regret saying that. I could have got a lot of buys during the pandemic. I don't want to say I'm an aggressive investor, but I would have bought a lot of stocks back pandemic area, but my mind was totally on other things. So we're going to talk about AT&T. I'm going to go over all the notes, everything that I've done. Has the stock cost me money? I would say absolutely it has, on the opportunity cost of buying other stocks. I only sold two of my holdings, two major holdings this last couple of weeks, and we're in a bull market. I really don't suggest you sell anything unless you're ready to reposition it in to something right away. And I would suggest an ETF if you're gonna. I wouldn't have money on the sidelines right now unless you're going to go into real estate or you're going to have something. Because right now I sold 2 positions in other companies into a bull market, and I do regret that. Left a lot of money on the table because right now the money's just sitting in the broker account, drawing bare interest at most. So I'm going to tell you about AT&T. I want to say AT&T has had horrible management. I'm not going to point fingers and names, but they lost a lot of money that would have probably cost shareholders at least 25. In my opinion, these are my opinions, 25% of shareholder value. The 2015 acquisition of DirecTV, that was 69 billion catastrophe, 69 billion, and then they had another 50 million lost just on advisory fees. DirecTV was a big mistake. 2015, just the company just is hemorrhaging debt. Then in 2018, another $85 billion in a disastrous acquisition of Time Warner, and that cost the company another $74 million in advisory fees. So they're just bleeding debt. I mean, it's kind of like Ford. They amass so much debt. What do? They cut their dividend. The shareholders get it again. Not the president, CEOs. They're still getting their big fat checks. And they made some horrible decisions. The board, the president, the CEOs, the company made some horrible decisions between 2015 and 2018. Heavy debt. And I look back, and the only reason I'm not selling my positions, which I still may, but the reason I'm not is this: it's had a trading range between 32 and 26, I believe, 25, and they still have not cut that dividend. If they have, it's been minuscule at best. But companies tend to cut dividends when they incur debt and they're trying to reposition themselves. Between the heavy debt load, I believe their share price right now reflects their market capitalization and the shareholders' equity. Is the dividend safe? That's the question I get asked. Me personally, no, I do not think the dividend is safe. And I believe once that's cut, I think a lot of retirees and people that are looking for this company, because its name was Old Reliable. AT&T always a great place, and right now they're trying to do the HBO Max streaming service, which is highly competitive, and they're nowhere near the Netflixes and the Apples and the several other companies that are doing it. They're nowhere. I don't believe they're competitive with them, and it's a heavy competition. So at one time it was considered a dull, boring, safe stock, a great place to park money. But look, the capital of this stock is eroding all the time. When capital starts eroding, so what? You get a dividend. So what? You have, a big share, tons of shares of it. So what if it's paying a dividend? You're losing in share price. So will it come back? I don't have that answer. I would be out of this stock if it went up into the 31s or 32s. Right now, I got to at least get to 31 to 32 to make it worth my while to get out. If not, I'll just keep playing the dividend and hope it doesn't get cut and just hold and hold and hold. But let me tell you something. If you're close to being even and you're not losing a lot of money, absolutely, I would get rid of this stock. Absolutely. Look, the last 5 years, this stock is down 30%. Is that my numbers? Are they correct? 33.6% in the last 5 years. Down $13.76 roughly in the last 5 years. So you do the math. It was a $40 stock roughly 5 years ago. Down 33%. Your money. So what? You're getting a 7% dividend. If that's what you want, fine. But if you had that money in an ETF, getting 18 to 25%, maybe more in some with the tech, your money's way safer and growing way better in an ETF. So if you want to have that philosophy of parking money in something that's dead, then AT&T may be for you. But there is a lot smarter plays that you can do. I just want to get to even, and if I can get just a little spike up to 30, 31, 32, I will probably be out of it because they have a lot of debt. I think over 176 billion debt. Them getting rid of the Time Warner deal, they used to pay down some debt, but all it takes is a dividend cut for this stock to go lower. That's the only thing keeping this stock where it's at. Year to date right now as we speak, down 5.5%, rebounded a little bit during the pandemic. But as I say, they're down 5.5% in a bull market where things are, a good ETF, which there's so many of them out there. If you want to know what ETFs I recommend, leave your questions in the comment sections and I'll give you several to choose from. But they're pushing 22, 23, 24, some 25 and higher, you know? So that's why I sold my Sony position and my Alcoa position to raise some cash to go into an ETF. Having said that, I wish I would have held on a couple more weeks. I can't go back in hindsight. Um, so looking at their technical and fundamental analysis, which I did not go over other than the stock has fallen $13 and they have huge debt. I'm trying to condense this into what every investor can understand between an eroding capitalization and the stock price eroding and huge masses of debt, and they're not even close to where their competition is. I would not recommend buying AT&T. Having said that, I want you to be clear that I do own it and my exit points are in the 30s, you know. So that's my strategy. I am not a seller at this time, but I am looking to get out of the company. Do I think it's safe? You know, this is a very boring stock, and it's a bittersweet stock because people, you know, a lot of people recommend AT&T. I was been a big supporter of AT&T. I just, it's a bittersweet thing to do a video like this because if it wasn't for this bull market and the crazy run on companies just going, setting new record highs, I wouldn't be so inclined to tell people that AT&T is not a good purchase at this time. Now, having said all this, they got huge debt. They're trying to get their streaming service back in play, and they're trying to get their 5G phone business going well. And they're trying to not lose any more to the competition. They're trying to do what they can do, but competition and these horrible acquisitions that they've had over the last 5 years just really cost the shareholders a fortune, you know. Not the CEOs, although I know they get paid in stock, so what? They still have huge bonuses, huge salaries, and the people that always get it are the shareholders. Oh, what else can I tell you? The only positives I can tell you is the dividend stays in place and their streaming service goes well, HBO Max, maybe they can generate and get out of some of this debt and pay down some of this debt. But usually the way companies get out of debt, they always cut the dividend. And as soon as they cut the dividend, they will, you know, pay down their debt. Having come to the conclusion of this and summing this whole stock up, I don't recommend it. I recommend trying to sell out where you can get as much money back as you can. I don't think it's a good time to enter. If you do and you're just looking for a place to park money, there's a lot better, safer places to park money right now than AT&T. I just, you know, even if you don't want an ETF, I hate to sit there and not give AT&T a buy rating, but between their heavy debt load, their 5 years of just abysmal performance, down, you know, 33% when the market's just on fire the last 5 years. I mean, that's just lost revenue that you could be making in the market. Horrible management and board directors decisions. I don't think it's old reliable as of now. Do I think they will bounce back and get their stuff together? Maybe sometime in 2022, 2023, they could be set to rebound. But as of right now, I wish I could give it a better recommendation, but there's so many better decisions to make, especially when it comes to a stock like this. So I hope that helps you guys. I hope you enjoyed the video. If you did, please give it a like. If you'd like to add some stuff, and leave it in the comment section. I try to really simplify this video. I don't have the pretty graphs. Just know this, it's gone over the last 5 years from $40 to $26. So it's eroded a long way in value and market cap. So guys, I'm always going to make the videos as simple as I can, in very much layman terms as I can. So if you have another stock you want me to do as far as my opinion, because these are just my opinions, who knows? It could get a spike for some crazy thing, but I'm just saying they did have a good first quarter. That's why I think it's staying at these levels right now. But when you have a massive debt load and it's really not even mirroring the S&P 500 at all. If any of these mutual funds and ETFs reposition that own AT&T, you could have effect there too. So there's so many negatives. The negatives way overshadow the positives. So again, I give it a sell signal. I'm not bullish on this stock at all. I'm in it. I'm not selling right now. If it goes up to 30, 31, 32, I'll be looking to exit. Y'all have a great evening and thanks for watching.